Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, the US calls for Palestinian Authority to run Gaza and the West Bank following the war with Hamas, as well as that the HMRC do face rising demand as more savers are forced into the tax net, and this is causing large issues for them due to lacks of resources, according to certain individuals. As well as that, we've got lots to talk about on the charts, also with lots happening on the economic calendar as well. But before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is the US and their top diplomat, Antony Blinken, calling for the Palestinian Authority to run Gaza. Now, the US's top diplomat has provided Washington's most detailed plan for post-war Gaza, with the plan being for the enclave, to be politically unified under Palestinian Authority, with the US Secretary of State Antony Blinken stating that Israel should not occupy Gaza following the war, and this is obviously all following kind of the conflict breaking out once again, following the terror attacks which did take place on October 7th, with Hamas militants massacring over 1,400 civilians, and in response we've seen aerial bombardment by the IDF. And now we've seen that kind of invasion into the Gaza area, the Gaza enclave, and now pushing into the Gaza city further. That said, he left open the possibility of Israeli control during a transitionary period, and this is what we've been hearing largely from the US, is this idea that Israel will be running Gaza obviously during the transitionary period. This is to be expected, really, as the US has been supporting Israel in its campaign to wipe Hamas out of Gaza. Its kind of process of doing that through its military means. They've largely supported that. They've supported Israel from before the war as well. So we were kind of expecting this sort of rhetoric. But it is interesting to be seeing that the US is taking more of a moderate position on this matter, rather than going full Israel can control Gaza for the rest of time. They're more so taking that moderate position, and we could argue that not only is this kind of a moral kind of message from the Biden administration, but possibly is even trying to accommodate more so to the left-wing sectors of the party, because as we've spoken about most recently, there is growing kind of discontent within the Democrat Party over this issue of Palestine, Gaza, and Israel, with many individuals within the Democratic Party more so aligning themselves with the Palestinian cause, and therefore not supporting Joe Biden and Antony Blinken's large support for Israel, which we've seen from the US historically. So this is something that's definitely important to note, is that they're kind of going for that more moderate position of only Israel controlling that territory during the transitionary period, with Israel vowing to eradicate Hamas from the Strip. Now the Palestinian Authority administers parts of the West Bank, but lacks credibility among Palestinians, with Arab officials warning it is unrealistic for the Palestinian Authority to replace Hamas in Gaza. Now, some would say that's very much the case, because if we just look to the elections which have taken place in Gaza before, we do understand that there were those elections between the more Palestinian Authority made up Fatah groups. This is a political group within Gaza and the West Bank, and they majority make up the Palestinian Authority. And Hamas did win those elections back in 2007, I believe. And so if we're kind of looking at this, we could be, kind of putting ourselves in another situation whereby, we provide or, establish a leadership which is supposedly one which will be for those specific individuals within that territory, those being Palestinians within Gaza, by implementing the Palestinian Authority as the government, which is largely Fatah controlled, whereas arguably the majority want Hamas. So we're in this kind of difficult situation whereby we want to establish that more moderate kind of position. We want to have those kind of, concessions and agreements and, deals where we meet on the halfway point between, Israel having full control and Hamas keeping control. And, that still may not work just due to the lack of credibility that, the Palestinian Authority has. Now, Benjamin Netanyahu, obviously, on the other hand, said Israel would have overall security responsibility in Gaza for an indefinite period. However, Antony Blinken said he had heard from Israeli leaders that the Jewish state had no intent to reoccupy Gaza, with the key being there be no forcible displacement of Palestinians. That said, we have already started to see that level of displacement taking place simply as a result of, military interventions into, the territory of Gaza, with the fighting that's now occurring within Gaza City causing, the displacement of 1 million Palestinians. So, that kind of statement is arguably, one without any foundations because displacement's already taking place. But I guess what Antony Blinken's trying to get across here is, there can't be any of this kind of forcible movement by the IDF out of Palestinians out of their homes to move to different areas, and then Israel take certain regions of Gaza as their own territory. And this is what Antony Blinken's trying to make sure doesn't occur in the midst of all this misery and death from civilians on both sides. Now, this all comes following Blinken's visit with Israeli and Palestinian leaders this week, with Blinken pressuring for humanitarian pauses and the release of 240 hostages in Gaza, with proposals for 12-hour pauses, humanitarian pauses, to secure the release of 10 to 15 hostages held by Hamas. Now, we do know, already there has been, a few hostage releases, only around 4, I believe, and, when we consider that there's still over 200 of those hostages being held by Hamas, that is a minute amount. So it does seem that Antony Blinken's trying to push for more of those hostages to be released. Now, this is all, obviously, this entire issue is obviously all following the Hamas terror attacks on October 7th and the Israeli retaliation strikes, which obviously have had their casualties as a result as well. Now, the US and its Arab allies will have to make a considerable effort to revitalize the Palestinian Authority into a body with credibility among the Palestinian public, with many Palestinians already being particularly frustrated with Abbas, and that's, the leader of the Palestinian Authority. So it's important to see how this plays out. It'll be heavily pushing the way gold moves. As these kind of de-escalatory measures are implemented, we will start to see gold see those falls in price. And if we do start to see any further regional escalations, we obviously will see the contrary and greater moves the upside for gold. So this is why these stories are so important to keep on mind, why these kind of issues of geopolitics and world tensions are so important to note. So definitely keep your eyes on this. Next to talk about, though, is the HMRC. Now, the UK's tax authority has warned that it faces additional costs this year, and this comes as 1.2 million extra people are pulled into the tax net due to higher earnings and savings rates. Now, the chief executive of HMRC did warn that they will be swamped by calls from unsuspecting savers, with many savers facing a tax charge for the first time this year after a long period of rock bottom rates as interests on their savings accounts pushes their earnings beyond the tax-free threshold. Now, this is something that we've kind of been hearing and kind of, seeing kind of hints of ever since we started to see these, increased levels of inflation across the economy, and we started to already price in higher interest rates. People began expecting higher levels of savings interest, and with that, obviously, that becomes taxable income at a certain threshold. So certainly, this was, a matter which could be expected. However, due to lacks of resources, I guess these issues are going to be hard to deal with, as many people begin to experience fiscal drag as well, which we'll get into now. And this is all part of, the process of fiscal drag as earners get dragged into higher tax bands. And this is something that we see generally during inflationary periods. People see their wages rise. Obviously, that doesn't give them any extra, purchasing power because inflation's going up as well. But if tax brackets don't move up in line with inflation, as a result, all those individuals which have just moved up their wages in line with inflation or even below, move into these higher tax brackets and begin to be taxed more when they really kind of shouldn't be based on, the way that those tax brackets were formed. So this is why it's so important to note. With an extra 1 million taxpayers paying tax on savings interest this year, with the amount of savings interest tax paid being expected to double from £3.4 billion to £6.6 billion this year. So it was £3.4 billion last year, and it's now expected to be £6.6 billion this year. So that's a significant level of fiscal drag, and despite this kind of being something that's probably going to be highlighted to Jeremy Hunt, it is something that's probably going to be supporting the government in these times of need, where there's a bit of a lack of money, and with this lack of growth, the government can take any penny it can get to use for spending, of course. Now, this savings tax windfall is expected to cause a headache for the HMRC as some file returns, for the first time in their lives, obviously. With some saying the HMRC does not have the resources to deal with the growing demand, but an ally of the Chancellor of the Exchequer, Jeremy Hunt, did respond to the situation, saying there are lots of worthy things to do, but we don't have leeway for many changes. And this is what we've been hearing in the general financial situation of the UK. And this has been something that we've been dealing with, I guess, since the 2008 financial crisis, is, there's many things which should be done, really, but the leeway for changes as a result of lack of finances just aren't there. So they're not able to actually embark on, these projects. But that's all to talk about in the articles, really. Keep your eyes on this, as it will be affecting the pound, as it also will be affecting British elections going into the year of 2024 as well as the pound, for just the usual reasons of tax levels, inflation, demand, and all of that sort of thing as well. So keep your eyes on this topic, certainly. But next to talk about is the charts, where we have quite a few things happening, but not too much on US indices to begin with. So on the US 30, as we can see here, we aren't seeing those strong levels of momentum, either bullish or bearish. Instead, we're actually seeing quite a strong level of kind of consolidation, following us reach this, this area of liquidity. Now, we did highlight going into this week that this was a strong area of liquidity following, these bullish moves on the US 30, as more dovish monetary policy by the Fed was, starting to be priced in, as a result of, a weaker line of economic data coming out last week, as well as, some dovish kind of signals coming out from the Fed, especially following their interest rate decision and their rhetoric following that. And so now we've reached kind of this area of liquidity. We are struggling to break above that. Now, this is an area, a trend line that I'd had highlighted for quite some time. I noted it in maybe yesterday's or the day before's morning market briefing. I did note it there that this was going to be a strong area of resistance. We kind of were expecting, price to break above it, just due to the high levels of momentum that we had. but it does seem that price is struggling to break above those levels, which is something that's interesting to note, of course, because coming into contact with this trend line as well and this strong area of liquidity, and we've kind of come into contact with this, double top, could be telling signs that at least we're going to see somewhat of a retracement before any moves higher. Obviously I have the Fibonacci tool drawn out here, so possibly start to look for any retracement opportunities as well as price does kind of halt where it is in that area of liquidity. Next to talk about though is the dollar, where not much is happening, but it has reacted in a bearish fashion from this area of liquidity and 38.2% Fibonacci area that we had highlighted. So it'd be interesting to see whether we'll roll off that area and take a bearish move to the downside now that we've reacted to that level. But obviously we need to be looking at any US economic data and any monetary policy signals to try and understand where the dollar could go. So keep your eyes on that. Next to talk about though is Euro USD, which as a result of the dollar beginning to make a bit of a bearish move to the downside, we have seen a bullish reaction by Euro USD from this 38.2% Fibonacci area and liquidity zone that we had highlighted. Which is interesting because we are seeing this kind of bullish channel form on Euro USD, and reacting to this area reinforces the kind of idea that we are on that bullish trajectory. So keep your eyes on Euro USD as we kind of are in this bullish channel. It'll be interesting to see how this develops, of course. Next to talk about next to talk about though is pound yen. Which has come into contact with this 38.2% Fibonacci area. Now I do believe that we were kind of noting this and talking about this in yesterday's morning market briefing, but we have now come into contact with it quite significantly. We've tapped on this area on this trend line, which has previously, I note it nearly every market briefing that we talk about pound yen, but I have noted before, this was kind of the bottom of the bullish channel that we were seeing on pound yen. It acted as a strong area as bullish support line. It then acted kind of on the inverse as a kind of a resistance line for the British pound against the yen, and now seemingly we've broken back again above it. We've come into contact with it and we've seen a bullish move away from it. So it'd be interesting to see whether we can continue a bullish move away from that area. So definitely keep your eyes on that. Next to talk about though on the topic of the yen still is USD JPY, which following its contact with this 78.6% Fibonacci level, we have seen a strong bullish movement away from it. On USD JPY, we've been seeing extraordinarily volatile movements recently, and this is why it's kind of so interesting and exciting to keep your eye on, as we are just seeing these extraordinary movements away from these significant price levels. So this is definitely something to note and keep your eye on. Next to talk about though is gold, which although we've been talking about recently how it was kind of within a range, almost in a kind of stagnating bullish channel to the upside. If we just take a look here, you can kind of see that sort of move to the upside, but I guess following the lack of escalation taking place within the Israel-Gaza conflict and the more de-escalatory measures which are now being implemented and worked on with these regional allies and partners, such as the article that we talked about at the start, with the US calling for the Palestinian Authority to begin working on kind of these new kind of constructions of a possible state which can be implemented within governing the Gaza Strip following Israel's military operation there. These kind of de-escalatory matters within the region. We haven't seen Hezbollah's attack on Israel. We haven't seen any other regional powers get involved despite Israel entering Gaza's territory, and therefore we are now seeing that sell-off in gold. Now the question is, as we are now seeing this kind of retracement following this bearish divergence we had noted, as we are now seeing this kind of bearish move to the downside, the question is, how far down will we go? Are we just seeing a retracement here and a continuation to the upside, or do we have the potential now to continue moving lower and lower? Obviously this will depend on economic data and any updates to the regional situation within Gaza. But this 38.2% Fibonacci area is definitely one to note, fitting perfectly in line with this strong area of liquidity. So keep your eyes on this level. Next to talk about though is Brent crude oil, which has reached the very psychological level of $80 a barrel and reacted from that level, of course. But reaching this level is quite a significant one, really. Although we were kind of hinting to the possibility of there being extraordinary price levels for oil as a result of any possible regional escalations within the Gaza-Israel conflict, we did also note that oil was taking moves to the downside as a result of weakening demand, actually, and obviously the demand causes such as predictions that this winter is going to be warmer, and so there's less need for oil, less demand, oil gets priced in lower. So we have seen these kind of dramatic falls in the price of oil, not seen since July really, which is extraordinarily surprising when you kind of consider the situation that we're in with Gaza and Israel and the possibilities of regional escalation. So arguably, to some, this is a massive, kind of underestimation of oil's price as a result of these geopolitical tensions, but that's for you to decide and try and understand. But that's all to talk about on the charts, really. Lastly, to talk about, of course, is the economic calendar, which we'll get through very fast. Now, firstly, we have Chinese inflation rate coming up, so note that for sure. As well as that, we have a Bank of Japan official's speech, as well as the ECB's economic bulletin, along with the Spanish consumer confidence figures, and as well, US jobless claims. We do also have a few Fed official speeches, as well as, a very important speech by the ECB President Lagarde. Obviously, she runs the ECB's monetary policy, so that's so important to keep note of. We're not expecting something extraordinarily special, but always try and take note of those speeches. As I said, we do have, most importantly, another Jerome Powell Fed chair speech. Obviously, with gold taking a move to the downside, with the dollar being in the mix, his rhetoric is so important to take note of during these times. So definitely listen out for whatever he says today. But that's all from us at Wildwood Capital. I think we got through some really good articles today. We've covered a lot on the charts as well, with lots happening on the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. See you later and goodbye.